This is Trading Lesson 51 delivered by Twigby Ehizogi for forex, crypto, stocks, options, and other chart related traders. You're advised to subscribe, share, likes, and make comments. It is far better to win a little but win frequently than it is to lose several times a day while hoping to finally figure out how to trade the first hour profitably. A channel is just a flag. So a bull channel is a bear flag and a bear channel is a bull flag. Also, if the market ended clearly always in long or short, traders should assume that the trend will continue on the open until they see evidence to the contrary. Traders have to know in advance how they plan to manage the trade before they take it, because changing goals after entering is a losing strategy. You can't have one premise and then manage the trade as if it was based on a different premise. If you trade thinner markets, your slippage could be much worse and you could be so far down in the first hour that you will not get back to break even by the close. One of the most difficult aspects of the trading is maintaining focus. Most traders simply cannot stay intensely connected to the market for the entire session, and they succumb to boredom and distractions, and often suspect that this is a major obstacle to them becoming consistently profitable. And they are right. The first hour provides you with a great opportunity to remedy this problem. Even if you think that watching every tick or at least every 5 minutes bar is impossible for you for an entire day, you might believe that you can do it for an hour. This has to become one of your primary goals because it is a great way to make money. The volume is huge and there are several trades every day in that first hour. If you simply trade the first hour and increase your position size once you become consistently profitable, you might discover that the intensity is needed for only that hour. Then, for the rest of the day, just look for 2 or 3 major reversals, which you can almost always anticipate 10 or more minutes in advance, especially if you are waiting for a second entry. Once you see the first one, get ready to take the second, which will usually follow within few bars. Once you can trade the first hour well, look to trade the first 2 hours, which usually provide the best trading of the day and can very often give you all of the profits that you expect from the entire day. Don't scalp stocks with small ranges. Early barbed wire often leads to a trading range day. If the first bar of the day is a trend bar, it is usually a setup for a scalp. If it fails, especially with an opposite trend bar, it is a setup in the opposite direction. When you are uncertain about the breakout, simply look at the moving average and use that as a proxy. If the first bar is entirely above the moving average, think of the open as a gap up. If the first bar is entirely below the moving average, Assume that the market is gapping down. A bull channel is a bear flag.